Today I really want to talk about the fact that you really don't need to be perfect when you're buying a home at all. So my name is Shanda Kim. I created Grand Abuse Real Estate and Funding Services, and I partner with Freedom Path because I saw something too many buyers struggling with. People are waiting for the perfect moment to buy a home, which it doesn't ever come. It never comes. You're never going to have perfect credit. All the instances and situations are not going to be perfect no matter what you do. You don't need to be perfect to buy a home. You don't need to have everything in order, but what you need is someone who's going to guide you. And honestly, I've seen so many people fail with this. They want to be perfect. They want their home. They want all their credit cards paid off and everything else. You can actually do that as you're in the process of getting your home. There's going to be a funding broker, a mortgage loan officer. They're going to tell you what you need and how to do it and give you some advice. So you kind of work on it while you're getting the pre-approval, because you don't want to buy a home till you have pre-approval. That is the first step on everything. And you really need to be gracious with yourselves. Too many people are hard on themselves. They're like, oh, well, I need to do this. I need to do that. No. The one thing you do need to do, don't buy any big ticket items. Don't get any more credit cards. Wait to buy all your furniture and everything else, because if you do that while you're getting your mortgage, you'll lose your house. You go buy a car while you're getting the mortgage, you'll lose your house, pre-approved or not. So buying a home is like getting in shape. You don't walk into the gym in perfect condition, do you? Some of us have a little flab, jiggle. We don't like that, do we? So you walk in exactly as you are, and then you build it from there. You don't walk in perfect and you're not a 10 out of 10 immediately. You're going to be a 2 out of 10 some days. Some days you might be a 4. The getting to the 10 actually does take some time. It does take some patience. So let's talk facts. There are real minimums most buyers don't know. First of all, you don't need 20% down. And home buyers have this conception, and I don't know how to say it, it's a fake thing. You don't need 10% down. You don't need to even sometimes have more than 3% down. Sometimes you have 0. So you don't need a massive down payment, perfect credit, 0 debt, or any of that to buy a home. Numerous programs like FHA, VA, USDA, or conventional loans allow low down payments, 0 to 3%. Except lower credit scores, 500s and up, which is a hard thing because people don't have perfect credit, especially after what happened with the pandemic and everything with the government shutdown. That hurt a lot of people. So like a 500, 520, you can get your mortgage. Be expecting to pay more in interest with those lower scores. Now, offer down payment assistance. A lot of programs do this, and they allow you to buy with existing debt. That's why I say you don't have to pay off all your debt. This makes home ownership accessible sooner by preserving cash for emergencies or other investments, not just a huge down payment, because you always need that nest egg no matter what, and get a home warranty. I have Service Choice through Minnesota Energy, and it is amazing. It has saved me thousands of dollars. Now, you don't need 20% down, and this is why. First of all, you need to conserve cash. A smaller down payment, 3 to 5%, frees up cash for the emergencies, renovations, or other debts. Look at your mortgage report and also avoid private mortgage insurance, because with FHA and stuff like that, you're going to have that, like rural development, all those loans. But if you can do the 20% down, then you can avoid that. That is why people always say 20%, 20%, 20%. But once you have a certain amount of your mortgage paid, you can actually have that taken off. And it's not an excessive amount every month. I think my mortgage insurance is like $25 a month. But it also keeps many things sidelined. And there are down payment resources. Now, programs available, FHA loans, they have like your 3.5% down. VAs are 0% for veterans. VAs are for veterans. USDA 0% in rural areas. USDA really tries to get people living out of the city and developing rural areas. I love living rural area because guess what? I have a huge garden and I have the best fresh vegetables. Now, also you gotta look at conventional loans for 3 to 5%. That's a common down payment. And that is according to Twin Cities Habitat for Humanity. Now, why, I'm trying to think of the words, why you don't need perfect or zero debt. Credit flexibility. Some loans, especially FHA, consider scores in the 500s, looking at your overall financial story, not just one number. They look at everything. Debt to income. Lenders assess your ability to repay. You don't need to eliminate all your debt, just show you can manage it alongside a new mortgage payment. And I've seen it a lot where renters are like, my rent is more than a mortgage, but I can't get a mortgage. There are other extenuating factors, and it's where you want to live too, as to what kind of loan you can get. So you don't need to have it all figured out, and this is why. Support systems like down payment assistance, seller concessions, that's seller paid closing costs, help bridge financial gaps. And it notes down payment resources. So that is two big things you really need to look at. I see them used a lot. Now also, your financial story, the lenders are going to look at consistent income, manageable debt, responsible savings. They want to see how you keep your risk low, even with limited funds. So the 20% rule is a myth for many. Modern loans and assistance programs are designed to help buyers with less, getting them into homes faster and building equity sooner. You don't need perfect credit. Buyers often assume they need a flawless credit score to finance a major purchase. No. Yes, your major purchase like a home. This is such a myth. It's a myth. Lenders look at entire financial pictures, meaning that while a higher score can secure better terms, an imperfect score will not automatically disqualify a buyer. And here is why you do not need perfect credit. Lenders assess your complete financial profile, like we talked about before. So your credit score is one factor. And then look at your payment history, your steady income, employment stability, manageable debt levels. Those are all things to look at as well. So perfect score offers no extra advantage for the best rates. Once a credit score reaches the excellent range, typically 760, 780 or above, borrowers qualify for the best available interest rates. That's why they look at your credit. And an 850 score does not provide better terms than a 770 score. It's a myth. It really does not. So aiming for absolute perfection is unnecessary to maximize your saving potential. Various loan programs exist for different credit tiers. Different loan types have varying credit requirements. Conventional loans usually require a score of about 620. FHA loans, which are backed by the Federal Housing Administration, are designed for buyers with moderate credit and may accept scores as low as 580 with a low down payment, which is amazing because that's how I got my house. Now, VA loans are eligible for veterans and active duty service members. They don't have any official minimum credit score requirements set by the VA, though individual lenders may set their own minimums. So if you're a vet, be prepared for that. Or if you're active duty, be prepared for that for you and your family. Still, keep your credit up. Manual underwriting is an option offered by some lenders that bypasses automated credit checks entirely, focusing instead on non-traditional credit history like rent and utility payments, employment history, and savings. Paying those bills helps. Keeping track of paying those bills on time helps. You can use those to boost your credit score now. Did you know that? Yeah. I thought, whoa, mind blown when I found that out a few years ago. So, and then again, manual underwriting is an option offered to some lenders. It bypasses automated credit checks entirely, focusing instead on non-traditional credit history. Keep that in mind. I've just repeated that for a reason. you can compensate for a lower score. If your credit score is fair, a larger down payment or a stable long-term employment history can help mitigate the perceived risk in the eyes of the lender. So, credit scores can be improved over time. It's not easy, and you have to be very diligent when you're doing it. You do not need to wait until your credit is perfect. Like I said, 770 is going to get you the same interest rate as an 850. You get yourself up to 770, ha-ha, you did it, you reached the top. So you can secure financing now and then work on improving your score and potentially refinance with the better terms in the future. Key steps to improve credit include paying your bills on time and reducing outstanding debt. Stop maxing out your credit cards. Credit cards are not your friend sometimes, unless they have where you get money back. Those are good. I would say get a high interest savings account, have everything put in there, and then use that money to pay your bills and keep money coming in for those savings. That's what I hear a lot of people do for that. I have a high interest savings account and I love it. I love it. I just love it. It's part of building wealth. Now, this is also saying that the bottom line, okay, is that while higher scores generally means more favors rates, it does not have to be perfect. It is not impossible or impassable as a barrier to achieving homeownership. The key is to be prepared. Understand your options. Work with a knowledgeable lender who can find a plan that works for your specific financial situation. That's important. You want a realtor and a lender who are on the same level, who talk. Because if one's over here not talking, this is getting worse. So we really need to keep in sync. There has to be communication. You don't need to eliminate every debt to have a home. Buyers don't need to eliminate all debt before purchasing, because good debt, like mortgages, student loans with low rates, is manageable and helps build assets, while high interest bad debt, credit cards, all that shopping sprees you went on for the holidays, is the real focus. Lenders look at your debt to income ratio. So paying down costly debt frees up cash flow, improves credit, and shows responsibility. Shows you're responsible, says you have responsible habits, makes you a better borrower for new loans without needing zero debt. Honey, I'm going to be honest with you, nobody has zero debt, not even me. So good debt and bad debt. Your good debt's your mortgages, your auto loans, student loans. They can build equity or offer future income potential, especially at low interest rates. Lenders see these as investments in your future. Bad debt, your high interest credit cards, personal loans, non-essential, payday loans. These all drain your cash, they hurt your credit, and signal financial instability. Shows that you are not a responsible person. So an impact, you want to look at your debt to income. Look at everything. Look at your good debt, your bad debt. Do credit score boosts. Pay down your revolving credit. Those credit cards are hurting you. They might help you today, but they hurt you tomorrow, unless you pay them off every month. Financial health. Eliminating costly, non-productive debt reduces stress and frees up cash, demonstrating better money management and having zero debt but no savings. Yeah, you still need to get that savings in order. Now, focus on affordability. The goal isn't zero debt, it's managing debt so you can comfortably afford your new payment for your home. You don't want to be so stressed out you can't see the future. Now, like we talked about before, there are programs that help. You don't need to have it all figured out. You don't need to. It's a process, not a snapshot. Your first home isn't your forever home, it's a step in your financial journey. So think of it like a set of stairs. And you learn as you go. Nobody comes out knowing everything. And yeah, no, it's not going to happen. Experts handle the complexity. Agents like me provide the strategy, research disclosures, and ask the right questions. Lenders clarify financing and debunk myths, like the 20% down rule, and get you pre-approved. You cannot buy a home with pre-qualification. You have to have a pre-approval. And you can mess up your pre-approval, like I said, if you go on a spending spree before you close on that house. You don't need perfect credit yet. You can improve credit and find programs, grants, making homeownership achievable even if your finances aren't perfect now. Your agent builds the roadmap, which is me. I am your agent, your real estate side. I also help a lot of my clients with the credit building side through my Freedom Path platform, which we have wills, trusts, credit management, wealth building, all of that. We help you learn all of this. I can help you create a step-by-step plan, making decisions easier and reducing stress. I can work with a mortgage lender to help you understand the loan process, and they will help you understand what you need to do. That's why you want a realtor and a mortgage officer who work together, who communicate, and ensure that all communications are going to everybody so we're all on the same page. And if you need help figuring something out, I'm here to help. And it's about readiness for this step. Your readiness for responsibility, your readiness for maintenance, and your readiness for growth, not perfection in every detail. And there is a lot of maintenance when you have a home. That's why you need your home warranty plan. So what you need to do, start the conversation. Talk to your realtor early, even if you're just exploring options. Have your realtor help you find the right mortgage broker for you, the right loan officer that's going to be there for you. Because so many of them have so many different tools that can help you, and a good realtor will know which ones have the right tools for you. Get pre-approved, understand your budget, and then set realistic expectations. You don't want to fall in love with a $500,000 house, find out you're only qualified for $250,000. That's a downer. And I guarantee you don't have $250,000 laying around for this. So, focus on strategy. Work with an agent to craft a winning offer and navigate market challenges. I will help you. And I don't help everybody. I do like to interview my clients because I need for us to be able to communicate and mesh. And I like to be able to say, hey, let's talk about this, and be comfortable with it and not feel like, oh my gosh, am I going to get attacked? Because as an agent, I have had clients attack me because they didn't like to hear what I had to say, or they didn't do what they needed to do and they got mad at me because they weren't doing their job. I've had it happen, and I avoid that now, and I'm very selective with who I work with. And I love my clients. Like, I still talk to a lot of them a lot. Be open to learning. You want to embrace this journey and let me guide you and teach you and set you up for your future success. Now, remember, there are programs that allow 3% down, 3%, 5% down, 0% down depending on eligibility, credit scores in the 500s depending on the type of loan and financial story, down payment assistance and grant options, and seller-paid closing costs. Options do exist. You just need guidance. So, reality check. Yes, it works. Yes, it takes commitment. Yes, it can feel uncomfortable. Very uncomfortable. There's going to be days where you're excited and you're like this, and the days you're like, ah! It happens. It's part of buying a home. It's part of living. It's part of managing your life. But waiting for perfection means renting for years, wasting your money while home prices are rising and interest rates are all over the place. While you lose money, you could have been investing in yourself. Because when you invest in yourself, you're building generational wealth, which is a big thing. It's very important. This is why I built Grand Abuse and partnered with Freedom Path. So you're not starting alone. I help you analyze your credit story, understand your path, find the right financing that fits you, build a timeline, break down what's possible, create a customized plan for you, and remove confusion and overwhelm. So if you're ready to start this journey, and we can do an interview, because like I said, I interview, I don't work with everybody, send the word ready to my messages. And I'll help you personally find a way to look at your credit, fix any discrepancies, which improves your buying power and your options. Let's make your grand debut into home ownership happen. And let's find the path that fits you. It could take 3 months, it could take 18. It's all according to what you need. I hope you have an amazing day.